The EPF is reportedly setting its sights on making all its investments based on environmental, social and governance practices by 2030. According to Bloomberg, the retirement fund's CEO Tunku Ali Zakri Raja Muhammad alias said in an interview with its TV arm, the EPF believes ESG is the vaccine for any crises. He was quoted as saying that even at the height of COVID-19 last year, assets that are ESG compliant deteriorated at a much lower rate than the other assets. The Bloomberg article noted that demand has been buoyant for stocks based on ESG factors, helped by the strategy's relatively strong performance during the pandemic. For instance, it said a FTSE index of equities with significant involvement in environmental markets rose 37% last year, more than double the gain in the MSCI ACWI index of global stocks. It also noted the fund's aim to be ESG compliant comes amid a resurgence of COVID-19 infections in Malaysia, with factories belonging to glove makers, including Top Glove Corp, being one of the major sources of new cases. As for the emergency declared earlier this month, Ali Zakri reportedly sees it as a good thing, as it has brought a lot of certainty or normalcy in a very volatile market. The Court of Appeal quashed a development order by the Kuala Lumpur City Hall to develop Taman Rimba Kiara by Molten subsidiary Memang Perkasa. The three-judge panel, led by Federal Court Judge Datuk Mary Lim Tiam Swan, unanimously decided that the development order obtained in 2017 by the joint venture of Yayasan Wilayah Persekutuan and Memang Perkasa for the project is null and void. The judges ruled that there are appealable errors which warranted intervention by the appellate court. In doing so, they set aside the High Court's decision on November 28, 2018, which dismissed a bid to halt the project by residents of Taman Tun Dr Ismail, which adjoins the park. The residents are against the proposed development, comprising high-end serviced apartments and one block of affordable housing apartments for residents of the nearby Bukit Kiara longhouses. In response, then Federal Territories Minister Khalid Samad proposed a scaled-down development plan. City Hall then cited the relocation of the Bukit Kiara Longhouse residents as a reason for the granting of the development order, that it was in the interest and for the welfare of the community. But Justice Mary said the project was and is in truth and reality a pure business and commercial joint venture. Hailing today's decision as a victory, the residents are now calling on the authorities to work together to deliver affordable, low-density, permanent housing for the Longhouse residents within the existing 4 acres of the Rumah Panjang and leave Taman Rimba Kiara to be the wonderful public park that it already is. Goldman Sachs CEO David Solomon reportedly saw his annual pay fall by $10 million or 36% last year, reflecting the bank's role in the 1MDB fiasco. Citing regulatory disclosures, Reuters reports that Solomon will receive $17.5 million compared with $27.5 million the year before. Meanwhile, CFO Stephen Sher will be paid $15.5 million, 31% or $7 million lower compared with 2019. And COO John Waldron will receive $18.5 million, down 24% or $6 million from the previous year. Last October, Goldman, which agreed to pay $2.9 billion to settle probes into its role in the scandal, said it is clawing back $174 million from a dozen current and former executives, including Solomon and his predecessor Lloyd Blankfein. The bank had received a hefty fee of $600 million from 1MDB for its help in arranging the issuance of 3 bonds, amounting to $6.5 billion over 2012 and 2013. Digi.com posted a net profit of 280.18 million ringgit in the fourth quarter of FY20, an 18.3% drop from a year ago, as the group's service revenue continued to be hurt by weak consumer and business spend amid the CMCO. Revenue dropped 7.14% to 1.56 billion ringgit. The telco declared a fourth interim dividend of 3.6 cents per share for FY20 versus 4.4 cents in the same period in the previous year. For the full fiscal year, it booked earnings of 1.22 billion ringgit, down 14.8% from FY19, as revenue fell slightly by 2.3% to 6.15 billion ringgit, compared with 6.3 billion previously. Moving forward, CEO Alban Murty says the group will maintain its focus on accelerating its digital agenda and modernizing its network and IT infrastructure to enhance customer experience, as well as support the society's recovery in this current climate. Lotte Chemical Titan Holdings says fourth quarter FY20 net profit nearly doubled quarter-on-quarter on improved margin spreads on the back of higher average product selling prices. In a bourse filing, the chemical manufacturer said earnings rose to 151.16 million ringgit from 78.77 million ringgit in the third quarter of FY20. Revenue, however, fell to 1.92 billion ringgit from 1.94 billion ringgit in the previous quarter on lower sales volume. On a year-on-year basis, net profit was down 19.49%, while revenue dropped to 1.92 billion ringgit from 1.97 billion ringgit. Full-year net profit slumped to 148.59 million ringgit from 439.73 million ringgit in FY19, while revenue declined 18% to 6.9 billion ringgit from 8.44 billion ringgit. In a statement, Lotte Chemical Titan President and CEO Park Yeon-chul said the group had a positive operating cash flow of some 1.1 billion ringgit in FY20 and a strong cash position of 4.2 billion ringgit. He highlighted that Lotte Chemical Titan is designated as an essential service, which provides vital raw materials for the production of plastic packaging and healthcare equipment in Malaysia and is hence able to operate throughout the MCO.